What is Lucid Motors worth? It's the most important question for Churchill Capital IV stock. And it's a question that at the moment is difficult to answer, and that before Monday afternoon's official announcement of the Lucid-CC4 merger was nearly impossible to answer. Lucid Motors has no revenue, precluding any backward-looking fundamental analysis. In its place, we'll use Tesla as a benchmark, admittedly with some logic. Former Tesla executives lead Lucid, and CEO Peter Rawlinson has said publicly that Lucid plans to follow Tesla's strategy of targeting the high end and then the mass market. Lucid and Churchill even use TSLA as a comparison in the merger presentation released on Monday, but pegging Lucid and thus CC4 stock to Tesla had its own flaws. Should Lucid be worth 1/10 of Tesla? 1/20th? 13.5%? Those proportions deliver widely varying projections of CC4's fair value, yet none seems necessarily more rational than the next. With the merger official, we now have a bit more information. One data point stands out. In the SPAC merger, Lucid agreed to raise capital at a valuation of less than $15 billion. Even with a 43% decline as of this writing, CC4 stock still suggests Lucid as a whole is worth just over $52 billion, about 3.5 times as much. One data point alone doesn't mean the valuation implied by CC4 is incorrect, but given the parabolic rally in that stock, it does suggest caution even with Monday evening sell-off. It takes a bit of work to understand the equity value implied by the current CC4 stock price. CC4 has 270 million shares outstanding, but there are also 41.4 million public warrants exercisable at $11.50 per share. With CC4 at an even $40 after hours, those obviously need to be included in pro forma share count. Another 44.3 million founders' warrants, some of which vest at $20, $25, and $30, and 17.25 million founders' shares are outstanding. Lucid is getting about $4.4 billion in cash directly from the merger, but also will have nearly $1 billion coming in from warrant exercise. All told, the current CC4 stock price suggests Lucid will have an enterprise value of $52.2 billion. That's a little trickier. The SPAC funding is being done at $11.75 billion per Churchill, but the PIPE is at a $24 billion valuation. From the table above, we can find the weighted figure. Lucid's existing shareholders are giving up just under 29% ownership for total cash contributions of $5.4 billion. That in turn gets to a weighted figure of roughly $19 billion. Back out the cash, and Lucid is raising capital at an enterprise value of nearly $14 billion, less than 1/3 of the value implied by the CC4 stock price, even with today's plunge. The current CC4 stock price instead values Lucid at $52 billion net of cash. Meanwhile, the EV manufacturer is projecting 2023 revenue of $5.532 billion. This slide is entitled Lucid Positioned at a Fraction of Tesla's Valuation Multiple. That's no longer the case. With CC4 at $32, Lucid's 2023 enterprise value multiple is above 9 times. That's now above TSLA's current multiple, given the big 2-day sell-off in that stock. Bulls can make two counters to the point so far. First, the fact that CC4 stock still trades at a premium to the price at which raised capital doesn't mean that the stock has to fall to or near that price. Just in the EV space, Switchback Energy, which is merging with the charging station play ChargePoint, trades at 3.6 more than its merger price. Battery developer QuantumScape merged at $10 in a deal that was announced early September. Less than 6 months later, it trades at $65. Second, it's still possible that CC4 is a long-term buy at $35, or even Monday's regular session close of $52. There are reasons why investors bid CC4 up as the rumors of a Lucid deal swirled. Widening EV adoption seems like basically a done deal at this point. There probably isn't a company better suited to be the next Tesla. There's even a reasonable case to be made that CC4 Lucid stock should trade at a premium. This may well be a better story than the likes of Fisker. As far as the Tesla comparison, Fisker's 2020 and 2023 revenue bases will be lower than those of Tesla, and its growth runway longer. A roughly equivalent revenue might suggest that CC4 stock remains a buy. Personally, I wouldn't agree with those arguments. However, SBE and QS have roared. Most other SPACs, even well-received ones in the EV space, have not done so to nearly the same extent. But more importantly, the mass size of this SPAC and this deal matters. The $52 billion enterprise value priced in at $32 against the $14 billion figure implied by the capital raise suggests that Lucid gave up a massive amount of value. It argues that Lucid gave up nearly $15 billion in equity value for just $4.4 billion. That's an obviously enormous implied fee. Meanwhile, Lucid still is valued at more than double the valuation suggested by PIPE, whose details appear to have been finalized only in the past few days based on recent reporting. If the major institutions out there thought Lucid was worth $35 per share, surely the PIP could have consummated at a higher price than $15. If that was the case and Lucid didn't get the deal, then in turn colors the case for post-merger minority ownership in the combined company. As for the electric vehicle revenue arguments, those two are flat. Lucid no doubt merits a premium to Tesla, but not all of the scenarios are blue sky. Again, this is a pre-revenue company with the 2022 and 2023 multiples based solely on management targets. Those targets only exist because Lucid is going the SPAC route, as they're generally not allowed in traditional initial public offerings. That aside, as impressive as the Lucid business plan is, significant execution risks exist in simply getting to that 2023 target, let alone growing from there. The core problem here, and the core reason for the after-hours sell-off, seems to be simple. CC4 stock ran too far. In the run-up to the announcement, the bull case too often seemed to be that Lucid is awesome and therefore CC4 is going to $100. The 8.4% gain on Monday in particular, which at one point in early trading was nearly a 19% rally, was particularly stupefying. After all, recent reporting largely got the parameters of the deal correct. Bloomberg, in fact, over the weekend reported the deal would close at a $15 billion valuation. That valuation gets the math to basically the same place it sits now, yet CC4 soared. At Monday's close of $57, Churchill itself had a market capitalization, even before warrants and founder shares, of $11.8 billion. Did some investors believe that Churchill was acquiring all of Lucid? The fact that CC4 stock in retrospect looks to have been a bit bubbly creates a problem going forward. It's tempting to argue that in this market, a 30% decline in any EV SPAC is a buying opportunity. Some investors may think they're getting Lucid cheap after Monday's sell-off. That's simply not the case. To be clear, that doesn't mean that Lucid is going to bust, or that CC4 is head back to $10, or even that stock can't rally long term. What it does mean is that some buyers of CC4 over the past few days and weeks put a condescending spin on it, and even they don't understand what they're buying. We now have much more information than those buyers did. The problem is that the information suggests not only was $57 too high a price, but that $35 may well be too. The bubble in EV stock seems to be deflating, with Tesla, NIO, and XPeng all pulling back from their year-to-date highs. There are a lot of small companies trying to enter the EV space, and with the major auto companies all moving into the same space, it is hard to see how the inflated valuations can be justified. If you're looking at Lucid as a long-term investment, there will probably be a more attractive entry point either between now and the closure of the merger or after the expiry of the lockdowns. It is an interesting company, but not at the price that investors are paying right now. Of course, the information displayed on this video may not come out as expected, and this is why I always encourage you to do your own research as well before making any investments. And by doing my research, I came up with these conclusions. Let me know your opinion on CC4 stock in the comment section down below. And don't forget to like, subscribe, and hit the bell button for notifications on our future content. Thanks for stopping in, and we'll catch you on the next one.